Good morning, everyone. Welcome to our live market outlook for Monday, 17th of October 2011. As known, the main focus on the markets remains on the Saturday's G20 meeting and the outcome of the meeting. Actually, there was no repeat of the united stand of the G20 members like in 2009. That to pull the world back from the crisis. However, there was a mutual sense of fear that if Eurozone fails to deliver the sustainable plan for coming out of the current debt crisis, the global economy would be in the deep troubles. So the pressure was on the Eurozone to finally get on the top of its debt crisis as ahead of their meeting in 1 week, 23rd of October. And this time there was just more than rhetoric things with the will for a strong action to come out of the current problem, actually to tackle the problem in a proper way, as the British Prime Minister commented last week that their action is insufficient, that they always come a bit too late and do a bit less than required. At this point, they agree and they are willing to take an action with the main points on the recapitalization of the Eurozone banks that are coming in troubles, with the recent confirmation of the expansion of the fund for aid of the countries, currently expanded to 440 billion euros. However, some analysts believe that this fund should come to around 2 trillion euros in order to be able to handle all the current problems. The second thing is the Greece, and solving these two problems actually would boost the Eurozone economy and spark the further growth of the economy. With Greece, the problem actually seems that cannot be solved without larger write-down of the Greek debt. And now the governments are working on it to persuade the banks to accept this. The German finance minister, Wolfgang Schäuble, in his interview on Sunday mentioned this, with also the Eurozone biggest powers, France and Germany, standing behind all these current movements, and the positive tone that persists actually from the last previous weekend's meeting between the Chancellor Merkel and President Sarkozy. So a positive tone, I would say, persists in the markets in the past 10 days or so, and the hopes are quite strong for further steps of recovery and avoiding the catastrophic result in case of failure of Greece that would further trigger a domino effect towards the other countries such as Italy and Spain. Also the banks that are in troubles due to exposure to the Greece. Actually the outcome would be catastrophic. Now we all hope that results of the 23rd of October meeting would be very positive, and a good and workable solution will be found in order to start moving ahead and showing actually stronger results in solving the Greek problem. Back to the markets to see just a brief outlook to today's calendar, and nothing from Europe due for today's day. However, from across the ocean, Canada comes with the foreign securities purchases, new motor vehicle sales, and at the same time at 12:30 GMT we have US Empire State Manufacturing Index that is expected to show much better result from the previous month's release that showed -8.8. Today's forecast is -3.9. Later on at 13:15, the US capacity utilization rate, slight increase to 77.5 is forecasted for today, compared to 77.4 the previous one, while US industrial production monthly for September is expected to stay unchanged, the growth of 0.2 the same like the previous result. Now let's take a look on the charts and see how the currencies moved in past 2 days from Friday's closing. The Euro, as you can see, they maintains a strong bullish short-term tone from 131.45, 9-month low posted on 4th of October, with the recent 12th of October strength extending to 138.32. The pullback corrective one was contained at 136.85, close to previous high at 136.97, and fresh strength cleared the 138.54, also cleared the Fibonacci retracement level of the broader downtrend from 145.48, which is 50%, 145.48 down to 131.45, 50% Fibonacci retracement at 157.80, exactly 138.46, with the recent strength last Friday extending to 138.92, just ahead of 139 as a figure resistance, and our key short-term barrier at 139.35, which is 15th of September high. The positive short-term tone is still intact with the 20-day simple moving average currently at 137.85, maintaining the current strength. What is currently sort of worrying is the building up the MACD bearish divergence, as we can see here that previous high was shown, the next high was not followed by MACD. This might be signaling some deeper reversal. 20 days moving average at this point 137.85 offers strong dynamic support, while the key break point is 137.80-90 zone, and the break of this level would be a bit risky and would weaken the near-term structure and allow for a stronger pullback. On the upside, immediate focus is at 138.92, 139, and then we have 139.35. Above this comes 61.8% Fibonacci retracement at 140.06, and actually this is a strong resistance zone, as we can see on the daily outlook. The momentum has been regained. The momentum emerged above its midline. The MACD is approaching the midline, with 55 days moving average on the daily chart at 139.51 coming as initial dynamic resistance ahead of static one at 139.35, and the key barrier zone is 61.8% Fibonacci retracement at 140.6, and 140.76 where is the currently 200 days moving average standing. Break above the later 140.76 would signal the possible change of the trend in the short to medium term, and refocus upside levels and confirm the bottoming at 131.45. Failure to clear it might be risking a lower top and extension of the downtrend from 145.48. On the British pound, again the strong strength from 152.71, 14 months low posted on 6th of October, has extended so far to 158.51, which marks over 38.2% retracement of the broader 166.17, 152.71 downtrend. With the, again, 20 days moving average currently at 157.42 supporting the strength. Initial target at 158.40 has been regained. Market reached 158.51, just ahead of the next one at 158.67, above which we have 59.00 as a figure resistance, and then 159.40, the 50% Fibonacci retracement of the downtrend from 166.17 down to 52.71, and above this 59.76 is on the 159.76 is the 55 days moving average on the daily. The near-term outlook remains firmly bullish. However, the RSI on the 4-hour and the hourly chart is approaching basically on 4 hours is approaching the overbought zone, and we might see a stronger correction ahead of fresh strength. On the downside breakpoint, and the strong support is at 156.85, 156.65, below which would delay immediate bulls and the open way for a stronger pullback. Immediate actually support at on the short term on the hourly chart at 157.80, today's low, and the main trend line support drawn from 152.71 ahead of 157.20, and then the key support at 156.85, 156.65. Dollar yen is showing some sort of positive tone as the recent action attempts to hold above 77, previous strong resistance now acting as a near-term support. However, the gains were limited all the time by the descending bear trend line drawn from 85.51, the low of 7th of April 2011, and while this line keeps the upside capped, the immediate tone remains still directionless as the pair moves within the narrow range in past 2 months. On the upside, this extreme point, which is 77.40.50 zone, needs to be cleared in order to resume higher. 77.85 and 78 come next on a break. On the downside, 77.00 is our initial support. Then you have a series of support, 77.65, 77.55. However, break below 76.30 would be risky, and focus downside with the 76.10 and 75.93 record low of dollar yen to come in focus. Dollar Swiss extends its recent short-term weakness after hitting fresh high at 93.13 on 6th of October. With the further weakness through 89.20, which is initial strong support, hitting 89.02. So this 89 round figure support was tested at this point, and further weakness would be likely now if on a clear break below 89.20, our initial support. The latest leg up from 86.46, we see that has already tested 61.8% retracement of the move higher from 86.46 to 93.13, and this would be risky for a further extension and test of key support zone at 88, 87.70, where the 200 days moving average currently stands. Also 88.26 is the main trendline support from drawn from 70.67, fresh record low of dollar Swiss. On the short term, 90 zone is now acting as key near-term resistance, and above this to ease the current bear pressure. However, clearance of 91.20 is required to revive bulls and refocus 93.10, the previous highs. From the commodities, gold maintains the recent gains, however remains stuck still until under 38.2% Fibonacci retracement of the down move from 1920 down to 1532, but holds the positive stance, and 4-hour studies are still supportive, trading above their midlines. We need to see the clearance of 1690, 1700, the initial strong resistance, in order to spark some stronger gains and open way towards the next level, which is 1725, the 50% Fibonacci retracement, and then we have the previous lows at 1761, and 1772 is the 61.8 retracement. On the downside, the trend line at 1668 offers initial support ahead of 1652 and 1625. Loss of 1630, 1600 would be risky, and refocus down the 1532. Crude oil is also in the short-term positive tone, as the bounce from 74.94 low of 4th of October cleared the previous highs and resistances at 84 and 84.75. Breaking through the latest high at 86.61. Also clearance of the trend line resistance that was mentioned in our previous last Friday's session. That was the key barrier. It's been cleared, and currently attacking at 50% Fibonacci retracement of the downtrend from 100.60 down to 74.94, above which to give some more positive tone and the open way for a test of 90.27, 90.57 as our next barriers, where also comes the 61.8 Fibonacci retracement of the entire move from 100.60 down to 74.94. The 4-hour near-term studies are positive and supportive, with the 20 days moving average currently at 85.61, underpinning the recent strength. The energies and commodities, also important to say, they are maintaining now positive sentiment, awaiting the verdict from the Eurozone countries, as some positive news actually continuing to come. Still ideas, but giving good support to the markets, and this is the reason of the recent gains of the euro and of the crude oil and the gold.